If you're a young adult in Singapore trying to figure out where to stash your savings, congratulations. Let's consider where to park your hard-earned cash in Singapore with three crucial factors coming into play: safety, flexibility, and returns. 1. The Bedrock of Security, SSB and Tbills. Directly backed by the Singapore government, your money in Tbills and Singapore savings bonds is as secure as it gets. Flexibility is medium, as Tbills may lock funds for 6 or 12 months, while SSBs offer a relatively easy exit with a few weeks' notice. In terms of returns, they offer 2% to 2.5% interest. Rating? These are your parents' favorites for a reason. 2. Traditional banks, savings accounts, and fixed deposits. Banking and finance is the core of Singapore's economy. While deposits in traditional banks are safe, returns in these savings accounts offer close to nothing. Fixed deposits offer high safety, being insured by the Singapore Deposit Insurance Corporation (SDIC), while giving a decent interest over 2%. However, flexibility is low, and breaking a fixed deposit early usually means losing money. Rating: I prefer keeping minimal cash here for spending. 3. CPF, the ultimate thank myself later move. CPF is government-backed and safe, but you can't withdraw early. Risk-free returns in the ordinary account is at a decent 2.5%, and special account at 4% plus is even higher. Just remember, even safe schemes can be scam targets. More on that later. Rating? Think long-term about how much you need in your ordinary account and consider transferring them to special account for more interest. 4. Digital banks, GXS, Maribank, Trust Bank, etc. MAS licensed digital banks offer relatively high safety, as they are also SDIC insured, providing a similar level of protection to traditional banks for deposits up to $100,000. Their flexibility is also high, boasting instant transfers. Returns are higher than traditional savings accounts, although it's worth noting that these rates have been dropping overnight. Maribank savings account now gives 1.88% PAA, while GXS offers 1.68% as of the time of this video. Rating: these are my favorite for emergency funds. 5. Insurance products and investment products. Backed by the insurer and the Policy Owners Protection Scheme (PPS) by the SDIC Endowment Protection, plans often offer high safety with a capital guarantee with some conditions. However, flexibility is often very low with long lock-in periods. Surrendering early can result in losses. Returns are medium or comparable to Tbills and savings bond depending on your policy. Investment-linked policies, ILPs, have a medium safety only because your stocks and bond funds are market-linked, meaning your cash can shrink if the underlying investments flop. Flexibility is also low, and fees can eat into your gains. Returns are variable and non-guaranteed. Don't buy just because your agent says it'll make you rich. These are only for those who truly understand what they are investing in. Rating: I'm locked in a couple of plans that have long-term protection and coverage. 6. Crypto wallets. High risk doesn't mean high reward. Crypto wallets present high risk. Without SDIC insurance and the principle of not your keys, not your crypto, your digital assets are vulnerable to hacks, scams, or simply losing access to your private keys. Flexibility is high, allowing for 24/7 trading, including at 3 a.m. when you might regret your life choices. Returns are highly variable. Rating: put in what you can afford to lose. 7. The safe box. Storing cash in a safe offers some safety to the risk of burglars. Flexibility is high, as you can access your vault anytime. Rating: unless you keep gold bars in your vault, returns are likely negative considering loss of value to inflation. 8. Lending to friends. This final option offers zero safety. Lending money to friends often results in the loss of both your friendship and your cash. Flexibility is very low. Good luck asking for it back. Returns are non-existent. Rating: just say no. Bonus: scams. Even seemingly safe options aren't entirely scam-proof. Some Singaporeans, especially the elderly or less tech-savvy ones, have unfortunately lost CPF savings to scams, and others have lost their life savings to sophisticated phishing schemes. This highlights a crucial point. Your vigilance is the ultimate safeguard. Perhaps to mitigate risk, one can consider policies or investments that give periodic payouts just for spending needs. So, where's your money sitting and is it actually safe or just feeling safe?